If you've settled credit card debt or you're thinking about it, you might be wondering, can I ever use credit cards again? And if so, how can I do better the next time? Well, the answer might surprise you and it could change everything about your financial journey. Hi, I'm Rob, a financial coach for over 20 years. I get how confusing debt can feel, especially with so many confusing ads out there. So I'm here to break down what's real, what's not, and how you can finally start taking control of your debt with confidence and clarity. Today, we're tackling one of the most common questions I get. Can I use my credit cards after debt settlement? This isn't just about whether your cards will work tomorrow. It's about understanding how debt settlement affects your entire financial future and what you can do to rebuild. Here's what we'll cover: how debt settlement impacts your existing credit cards, the truth about using credit cards during and after debt settlement, proven strategies for rebuilding your credit with smart card usage, whether you should even use credit cards after settlement, and the exact steps to use credit cards responsibly in your recovery. Let's dive in. Here's what your credit card company doesn't always tell you. The moment you settle debt, your credit cards are generally unusable. Once an account is settled, it's unlikely the issuer will allow you to keep using that card, especially if it was delinquent or charged off. Most of the time, the card is permanently closed. Let me paint you a picture. Imagine Jennifer, a single mom working 2 jobs in Tampa, who thought she was being smart by settling her $23,000 in credit card debt. But when she tried to buy her daughter's school supplies the next week, her card was declined at Target. She had to leave her cart full of notebooks and backpacks, embarrassed and scrambling to find another way to pay. The settlement company never warned her that this would happen immediately. Why does this happen? When you settle debt, you're essentially telling the bank, I can't pay what I owe. And from their perspective, you just become a high-risk customer. Debt settlement is likely to lower your credit score by 100 points or more, making you less attractive to lenders. But here's what's really happening behind the scenes. Your settled accounts will show as settled for less than full balance on your credit report, and this stays there for 7 years. Other credit card companies see this and often reduce your credit limits or close your accounts entirely. What has your experience been with credit cards after debt challenges? Drop a comment below. Your story could help someone else going through the same thing. The timing of when you use credit cards in your debt settlement process can make or break your financial recovery. Let's discuss the ideal steps that most people aren't even aware of. Phase 1. During debt settlement. Debt settlement companies typically encourage you to stop paying your credit card bills. That means you shouldn't be using those cards. They'll likely be frozen anyway. But what about other cards not in settlement? Here's where people make costly mistakes. Picture Robert, a 52-year-old construction foreman from Ohio. While settling 3 maxed out credit cards totaling $31,000, he keeps one emergency card hidden from his debt settlement company. What started as using it for legitimate car repairs quickly spiraled into ordering takeout when he was too exhausted to cook, buying work boots, and even paying his settlement company's fees with the card. Within 8 months, he racked up another $12,000 in debt because the underlying spending triggers were never addressed. Phase 2, after completing debt settlement. Once settlement is complete, you're in rebuilding mode. Going through debt settlement means you didn't pay your debts in full at the time they were due. It results in a lower credit score and reflects poorly on your credit report, where the settlement remains for 7 years. But here's the good news. You can absolutely get new credit cards. However, you'll likely start with secured cards where you put down a deposit, lower limits, higher rates, and lenders other than the ones you settle with. The key to getting back on track is patience. Let's imagine Michelle, a dental hygienist in Portland who chooses to go through debt settlement after her divorce left her with $47,000 in joint credit card debt. Her credit score plummets from 720 to 485, but she played the long game, lived in a modest apartment, drove her paid off car for 3 more years, and focused on rebuilding one step at a time. Eventually, her score hit 735 and she qualified for a mortgage on her dream townhouse. It is possible to move forward with the right plan, support, and mindset. What if the same tool that got you into debt can help you rebuild faster? I know it sounds crazy, but hear me out. As your credit score begins to repair after debt settlement, creditors will probably contact you with offers for new cards, but don't rush to apply for these new credit cards. Every time you accept an offer and apply for a credit card or other loan, you generate a hard credit inquiry that temporarily lowers your score at a time when it's trying to recover. Here's how to handle it with a structured strategy. Month 1 to 3, get one secured credit card with a $500 to $1,000 deposit and use it only for essentials like gas gas and groceries at no more than 10% of the credit limit. Months 4 through 12, continue keeping the utilization low and pay the bill in full. Your credit score should start climbing, and this is when those credit card offers start pouring in. Ignore most of them. Year 2 and on, add one unsecured card with decent terms and use both strategically. One for small recurring expenses and one for periodic use. Here's an example scenario. Let's say David, a warehouse supervisor from Charlotte, started with a secured Capital One card requiring a $500 deposit after settling his $19,000 in debt. He used it exclusively for his weekly grocery trips, never more than $50 per week, which he paid off every Sunday while meal prepping for the week. 14 months later, Capital One automatically converted it to an unsecured card and returned his deposit. 6 months after that, he qualified for a Chase Freedom card with a $2,800 limit and 1.5% cash back. His secret weapon? He treated every credit transaction like a debit transaction, money he actually had. The magic happens when you demonstrate consistent, responsible usage over time. Credit bureaus love to see sustained low utilization and on-time payments. What's your biggest challenge with rebuilding credit? Now look, this might be controversial, but I believe some people should never touch a credit card again after debt settlement, and others absolutely should. Here's how to know which camp you're in. It's important to know that this process isn't a one-size-fits-all approach. It depends on what led to your debt settlement in the first place. You should avoid credit cards if your debt came from impulse spending or a lack of budgeting skills, you haven't addressed the underlying financial behaviors, you're still living paycheck to paycheck, or you view credit as extra money rather than borrowed money. Consider using them again if your debt came from a one-time crisis like medical bills, job loss, or divorce. You've developed strong budgeting skills. You understand credit is a tool and not free money, and you have stable income and emergency savings. Let's look at two different scenarios. Imagine Patricia, a high school counselor who settles $34,000 in medical debt after her son's emergency appendectomy and complications led to a week-long ICU stay. Even with insurance, the copays and out-of-network charges are crushing. She waits 18 months after settlement, builds a $3,000 emergency fund, and strategically gets a secured card to rebuild. Now, she has excellent credit again. On the flip side, you have someone like Kevin, a marketing manager who settles $28,000 in debt accumulated from expensive dinners, weekend trips, designer clothes, and the latest gadgets, basically funding a lifestyle his $65,000 salary can't support. He immediately jumps back into credit cards after settlement, convinced he's learned his lesson. Within 14 months, he's carrying $15,000 in new debt and considering bankruptcy. The honest truth, credit card debt forgiveness, also known as debt settlement, shouldn't be done on a whim, as it can have long-term credit score implications and impact your ability to borrow money again in the future. Be honest about your habits. Your financial future depends on it. Want to know the difference between people who successfully rebuild with credit cards after debt settlement and those who end up in the same debt trap again? It all comes down to these 5 non-negotiable rules. Rule number 1, the 10% rule. Never use more than 10% of your credit limit. If you have a $1,000 limit, your maximum balance is $100. This keeps your utilization low and rebuilds your credit faster. Rule number 2, pay weekly. Make payments every Friday, not monthly. This keeps balances low and makes you conscious of your spending. Set up automatic payments so you never miss. Rule number 3, the one purpose rule. Use your card for only one category, like gas, groceries, or utilities. This prevents lifestyle inflation and helps keep spending controlled. Rule number 4, the 24-hour rule. For any purchase over $50, wait 24 hours before buying. This simple pause prevents those impulse purchases that derailed you before. And rule number 5, the emergency fund first rule. Don't get a credit card until you have at least $1,000 in emergency savings. Credit cards should not be your emergency plan. Now you might be wondering, why so strict? Well, the truth is, these rules protect you from the same patterns that created the debt in the first place. Together, these rules aren't just about rebuilding credit. They're about building discipline. They shift your relationship with money from reactive to proactive, and that's the foundation of long-term financial stability. Which of these rules do you think will be the hardest for you? Let me know in the comments. All right, we've covered a lot today. Let's recap the key points. Your existing credit cards will likely be closed after settlement, but you can absolutely build with new ones. The key is timing, strategy, and most importantly, addressing the behaviors that led to the debt in the first place. Debt settlement affects your credit for years, but you control how fast you recover. Whether you should use credit cards after debt settlement depends entirely on your specific situation and your commitment to changing your financial habits. If you do choose to use them, follow the 5 rules to stay on top of your wallet. Here's the bottom line. Debt settlement can feel like a journey, but it's not the end of your financial story. What really matters is how you move forward. Some people rebuild faster than they ever thought possible because they use this experience as motivation to change their habits. Others slip back because they don't address the behaviors that caused the debt in the first place. If you take nothing else from this video, remember this: your future with credit isn't about what happened before, it's about the choices you make from here on out. If you want more strategies like this, don't forget to hit subscribe and check out freedomdebtrelief.com for more resources on debt settlement. Your past debt doesn't define you, your actions do. You've got this. Thanks for watching.